Tuesday was a rotation day, not a sell-off, not a rally, a rotation. S&P 500 dipped 0.57% to 7,511. Nasdaq fell 1.15%. Dow up 0.64% to 51,999, another record. The money didn't leave, it moved. New here? Subscribe. Free note in the description. The move was from chips to industrials. Philly Semiconductor fell 5.71%. That's a full reversal of Monday's 5.45% gain. NVDA down 2.4%. Micron down 6.2%. Broadcom down 4.4%. TSM down 3.5%. These were Monday's heroes. Tuesday, they were the funding source. Where did the money go? Industrials. XLI hit an all-time high. PAVE hit an all-time high. Caterpillar hit an all-time high. Infrastructure, aerospace, defense, electrical equipment. That's not a tech rotation. That's a real economy rotation. SPCX was the wild one. Options debuted Tuesday. 1.6 million contracts traded. The stock ripped to almost 20% intraday. Market cap briefly passed Microsoft, then faded to close at plus 4.8%. That's gamma in action. Up, then gravity. Up, then someone takes profit. With triple witching Thursday and FOMC Wednesday, holding a gamma squeeze overnight is a brave call. This is FOMC Eve positioning, and the positioning tells a story. TD Securities put out their preview. Their call: the Fed's dovish tilt will shrink. Inflation forecasts go up. The dot plot shows no rate cuts in 2026 or 2027. If that's right, the rate market is underpricing hawkish risk. Kevin Warsh steps to the podium for his first press conference. Nobody knows his tone. In his confirmation hearing, he dodged every question about the rate path. He hasn't spoken publicly in weeks. The market's priced at 98.5% for no move, so the rate decision itself is a non-event. The dot plot is the event. The language is the event. The press conference tone is the event. Here's what I'm watching Wednesday. Pre-FOMC, the market will be range-bound. Nobody wants to be positioned wrong into an unknown chairman. Post-FOMC, 2:30 p.m. Eastern, the real move. If Warsh sounds comfortable with 4.2% inflation, tech sells off again. Industrials keep grinding. If he sounds flexible, if the dot plot shows a cut in 2027, tech catches a relief bid. The trade I'm watching: industrials on any post-FOMC dip. XLI and PAVE at all-time highs with real economy tailwinds. Iran deal means infrastructure spending. Lower oil means lower input costs. The trend has both macro and momentum behind it. If FOMC triggers a sell-off, that's the sector I'd look at first. One risk nobody's pricing fully. Triple witching is Thursday. Quadrillions in options and futures expire. On a week with a new Fed chair and a gamma-squeezed mega IPO. The volatility that FOMC doesn't trigger on Wednesday, triple witching might deliver on Thursday. One question: hawkish Warsh or dovish Warsh? What's your call? Drop it in the comments. Tuesday wasn't about what fell, it was about where the money went. Wednesday isn't about the rate decision, it's about the man behind the podium. You know the drill. Subscribe, hit the bell. Free note in the description. Stay sharp.